Banks feel like they've always existed. Vaults, interest rates, apps on your phone, it all feels permanent. But here's the truth nobody tells you. Humans were lending money, storing wealth, and getting scammed thousands of years before a single bank ever opened its doors. No vaults, no government insurance, no customer support line. Just trust, risk, and clever tricks that somehow kept entire economies running. You'd think the ancient world was financial chaos without banks. It wasn't. In some ways, it was smarter than what we have now. Grain, gold, clay tablets, even your reputation, all of it functioned as currency. And by the end of this video, you'll realize the banking system you trust so blindly is really just a repackaged version of ideas thousands of years old. Once you see it, you can't unsee it. Here's the part that'll mess with your head. Before banks, trust was the currency. Not gold, not coins, trust. Around 3000 BC in ancient Mesopotamia, temples were quietly doing something that looked a lot like early banking. Priests recorded grain deposits on clay tablets. Hand over 10 bags of barley, they wrote it down, and you could come back later and claim it, or transfer it to someone else. Sound familiar? That's basically a bank statement, just carved in clay instead of stored on an app. And here's the twist. The temple didn't need vaults full of gold to hold power. It needed records people believed in. Think about that. Modern banking isn't really about money. It's about bookkeeping and trust. The moment people stopped believing the priests, the whole system collapsed overnight. And that exact same fragility still applies to every bank on earth today. Now, here's where it gets real. Without banks, if you wanted to save money long term, you had 3 options, and all 3 could ruin you. Option 1, bury your gold. Sounds safe, right? Except thieves in ancient Rome literally made a living digging up buried coins near farmhouses. Option 2, carry it with you. Great, until bandits on trade routes robbed merchants blind. Silk Road traders faced constant threats from bandits, political chaos, and brutal exposed journeys. Option 3, trust a wealthy merchant to hold it for you. But merchants sometimes just vanished. Or worse, they lied and kept your money. There was no FDIC, no insurance, no customer support line to call. If you got robbed or scammed, your money was simply gone. Forever. That's the world people actually lived in before banking existed. Let's talk numbers, because this is where it gets interesting. Ancient Athens had something called trapeziti, private money changers, who sat at tables in the marketplace. Trapeza literally means table in Greek. Centuries later, medieval Italy had moneylenders sitting at benches called banco, and that's actually where the word bank comes from. Different eras, different languages, same basic idea. These trapeziti charged interest rates as high as 12 to 48% per year, depending on risk. Compare that to modern loans, typically 8 to 25%. People back then paid a brutal premium just to access credit. Meanwhile, in ancient India, moneylenders used something called hundi, a written note that worked like a check, letting merchants move money across cities without carrying coins. Some hundi networks stretched thousands of kilometers, faster, safer. That's not primitive. That's genius, built centuries before Western banking even existed. But here's the crazy part. One of the most influential money systems before real banks wasn't run by governments or temples. It was run by goldsmiths. And a habit they picked up, almost by accident, played a huge role in shaping the deposit and credit banking we still use today. Wait till you see how this connects to the actual currency notes sitting in your wallet right now. Because that thin, flimsy piece of paper you trust with your life savings has roots in a loophole some 17th century goldsmiths leaned into. They weren't trying to build an empire. They were just trying to make a little extra profit on the side. But that one habit helps set the stage for how modern banking actually works. Stick with me, because this next part completely changes how you'll see the money in your pocket. Let's get into it. Most people assume banking started with some genius economic plan. It didn't. It started with laziness and convenience. In 17th century London, wealthy people stored their gold with goldsmiths because goldsmiths already had strong vaults for their jewelry business. Simple as that. The goldsmith would give you a paper receipt for your gold. Over time, people realized trading the receipt was way easier than dragging actual gold coins around town. That receipt became one of the earliest forms of paper currency in the Western world. And here's the twist most people don't know. Goldsmiths noticed something. Not everyone came to collect their gold at the same time. So they started lending out gold they didn't own, while still holding paper receipts for the original owners. Historians point to this as a major early step toward what we now call fractional reserve banking, though it developed gradually. Let's put a name to this. Goldsmith bankers in London, guys like the Child family, literally became some of the wealthiest men in England, just by holding other people's gold and quietly lending portions of it out for interest. Nobody complained, because nobody actually needed all their gold back at once. It worked, until it didn't. In 1672, King Charles II literally seized gold deposits from goldsmith bankers to fund a war, an event historians call the Great Stop of the Exchequer. Depositors lost fortunes overnight. No warning, no insurance, just gone. And here's the part that should genuinely worry you. This is the exact same fear that drives bank runs even today. The system hasn't fundamentally changed. We just added government backing and fancy terminology to make it feel safer than it actually is. So, if the system was this risky, how did regular people, not kings or merchants, actually protect and grow their money? This is the turning point. Communities built their own informal systems, and honestly, some of them still work better than modern banks for certain people today. Rotating savings groups, called different names in different cultures, Susu in West Africa, chit funds in India, Tandas in Mexico, let ordinary people pool money together and take turns receiving the full pot. No bank required, no interest charged, just pure community trust. These systems moved billions of dollars worth of value throughout history, without a single skyscraper headquarters or CEO bonus. And guess what? Millions of people still use them today, especially in places where formal banking feels expensive, slow, or simply untrustworthy. Here's how these ancient systems actually worked, step by step. First, a group of trusted people, family, neighbors, co-workers, agrees to contribute a fixed amount, say $50, every single month. Second, each month, one member takes the entire pooled amount. 10 people? That's $500. Third, the order rotates, so everyone eventually gets their turn to receive the full pot. No interest, no paperwork, no credit score check. This meant even the poorest workers, people banks would never approve for a loan, could still access lump sums of cash for emergencies, weddings, or starting a small business. The only requirement was social trust, and if you didn't pay your share, you weren't just losing money, you were losing your reputation in the entire community. The second major system was merchant credit, and this one is honestly brilliant. Merchants in medieval Europe and the Islamic world used something called a bill of exchange. Imagine you're a trader in Venice buying goods from a supplier in Cairo. Instead of shipping gold across the Mediterranean, risking pirates and shipwrecks, you'd sign a document promising to pay a set amount at a future date, in a different city, sometimes in a different currency entirely. The supplier could then sell or transfer that document to someone else, almost like modern-day invoice financing. This single invention reduced the need to physically move gold across continents and laid the groundwork for international trade finance. Banks today still use a fancier version of this exact concept. They just call it a letter of credit. Now, these old systems weren't perfect, and here's where people romanticize history a bit too much. Mistake number one, assuming trust-based systems had zero risk. They didn't. If the group organizer of a rotating savings fund disappeared with the pot, there was no legal recourse, no insurance, nothing. Mistake number two, ignoring how brutal interest rates actually were without competition or regulation. Moneylenders in many ancient societies charged rates that would be illegal loan sharking today. Mistake number three, thinking informal systems could scale. They worked beautifully in small, tight-knit communities, but they completely fell apart in large, anonymous cities where nobody knew anybody. That's actually why formal banking eventually won. Not because it was morally better, but because it could scale trust using laws and institutions instead of relationships. So why does any of this history actually matter to you, sitting here in 2026? Because the exact same principles are quietly repeating themselves right now, with crypto, peer-to-peer lending apps, and community investment groups. People who understand how trust-based and credit-based systems actually work, historically, are the ones spotting these new opportunities early and using them wisely. People who don't understand this history keep repeating the same mistakes, chasing whatever system feels trendy without understanding the risk underneath it. If you learn how money systems evolve, from clay tablets to goldsmith receipts to rotating funds to modern banks, you stop being someone who just reacts to financial trends. You start being someone who can actually predict where money is heading next. That's the real advantage here. Let's bring this all together. Temples used clay tablets to track deposits. Goldsmiths helped develop early paper money and deposit-based lending practices that eventually influenced modern banking. Communities built trust-based systems like Susu and chit funds that still thrive today. Merchants invented bills of exchange to move value without moving gold. Every single one of these systems solved the same core problem. How do you trust someone with your money when there's no government guarantee behind it? And every modern financial innovation you hear about today, digital banking, peer-to-peer apps, even crypto wallets, is really just a new coat of paint on ideas that are thousands of years old. Understanding this doesn't just make you smarter at trivia. It makes you harder to fool the next time someone pitches you the next big financial innovation. Here's a bonus insight most finance channels won't tell you. One reason some small trust-based systems worked so well was reputation. If you scammed your neighbor in a small village, you weren't just losing a friend. You were losing access to the entire local economy forever. Nobody would trade with you, lend to you, or help you again. Compare that to today, where people can scam others online and simply disappear, create a new account, and start over. This is actually one of the biggest hidden weaknesses in our current financial system. We gained convenience and scale, but we lost the built-in accountability that made ancient trust-based systems so resilient. Some modern platforms are now trying to rebuild that same reputation-based trust digitally. So, here's the real takeaway. Every financial system humans have ever built, from clay tablets to crypto, is really just an attempt to solve one problem. How do we trust each other with money? The people who understood that, throughout history, built wealth. The people who didn't got left behind or got scammed. If this video just changed how you see money, imagine what happens when you keep learning this stuff every single week. Subscribe right now, because on this channel, we break down exactly how money, wealth, and hidden financial systems actually work. No fluff, no jargon, just the truth that actually helps you get ahead. Your financial education didn't start today, but it can seriously level up starting today. Hit subscribe, and I'll see you in the next one.